Investors are positioned all in on both stocks and bonds, and this has created an imbalanced market. Here's the problem. Spendiferous money printing is crashing head on with a commodity supply problem. Mix this with a bit of inflation, and you have a bearish market for both equities and fixed income. Get ready for a volatile 2021. The setup for the unwinding of stocks and rise in commodities is similar to the 1920, 1921, the 1973 to 74, and the 2000 to 2002 time periods. And to the best of my ability, I can find only two sectors that offer substantial upside, and that would be energy and materials. The smart money is already rotating out of historically overvalued equities and fixed income securities and to undervalued commodities. And this is not new news since I've talked about the rotation months ago. And you've heard me talk about the potential for energy and commodities. But if I'm correct, soon there may be a stampede in the rotation. Facebook, Apple, Amazon, Microsoft, and Google now account for a quarter of the S&P 500's market cap. But that's not all. According to Morgan Stanley, 92% of the stocks in the S&P 500 are currently sitting above their 200-day moving averages. Historically, this metric tends to have difficulty moving above these levels. And if history holds, Morgan Stanley expects this metric to turn lower, which can happen via price correction or moving averages rising as prices stall. Since we've talked a lot about the potential for energy and commodities, let's turn our attention to the tech sector. Today I'm going to show you three charts: Amazon, Apple, and Microsoft. From these three charts, you'll see that the great rotation is in progress. And if I'm correct, we will get a nice rotation from tech stocks to value stocks. However, if it accelerates, get a good grip and hang on because it could be one for the records. So, let's take a look. And we're going to start out here with Apple, and the symbol is AAPL. And for disclosure purposes, I do not hold any shares of Apple, Amazon, or Microsoft. Now, just simply looking at the price chart, a couple of things that should pop out is here, that double top at that point and that point there. The next thing should point out is the difference between the 20 EMA and the current level, which is right here. That's a pretty big difference in those two measures. Now, in my humble opinion, stock market gravity is starting to take hold. Moving down here into volume, that's not going to show you too much. Here into the MAC, you can see that this portion here is just slightly turning, maybe like this here, which maybe it indicates it can continue to rise. But at this level here, which is 19.525, there is no measure that is even close to this in the history of this stock. The closest we get is there, which is just over 5, probably about a 6 range. And we are triple, more than triple that. Moving down here into the histogram, you can also see that the top there, and we're continuing to decline just slightly. In the price rate of change, same thing, slight decline. Also, in the relative strength index, you can see a topping process, and the same topping process you can see there in stochastics as well as in the Williams. Looks like it's just rolling over, not unlike any of these measures back here. So, back up here to the price chart. If this does come down and simply comes down to the 20 EMA as it has done in here, here it went even further down, and in this area here, we have a long way to go. And that money, the smart money, is moving out. It's rotating from these growth stocks to the value stocks. Let's go to the next chart for Amazon. And now the charts that we're looking at are the 20-year monthly charts. And this chart here is Amazon. The symbol is AMZN. Now this is a little bit different than Apple. There's not a double top here, but what there is this pendant. Basically, you draw the lines like this. And when the stock gets to this pinch point, either it pops up or it falls down. You can probably guess where I think it's going to go. Let's move on down here. Again, volume not going to show much. Now, this MAC here is a little bit more evolved than the MAC for the Apple. Now, this actually shows that the fast line is starting to turn over. You see that little fish hook there, and I think it's just going to continue on down here. Moving here into the histogram, you can also see the top there and the decline. It's been declining for several months now. And then like Apple, the same thing for the price rate of change, slight decline. And then into the relative strength index, a further decline. Stochastics also, and then the Williams as well. Declines in each of these. If it continues, going back up here to the price chart, and if we just have a small correction, again, from this point here to the 20 EMA, again, as it has done several times before, that's a pretty big difference. And if it continues further, that's even worse. All right, let's go to our last chart, Microsoft. And this last chart here is Microsoft, and the symbol is MSFT. And as you can see from the price chart, this is very similar to Amazon. Again, we have the pendant moving up there, and then this moving down. The pinch point either is going to pop or it's going to crack. Once again, you know my opinion. If it cracks, it's going to come down perhaps to that 20 EMA as it has done here before. And that's a pretty good drop. But if it drops down to the 50 EMA, look out below. Now, into the volume, we do have a declining volume there. Not necessarily bad, but it's not good either. In the MACD, same thing as in Amazon. You can see the evolution. This is rolling over, and it's at a very, very elevated level. Here into the histogram, you can see the top there and the steep decline. You also have the declines, slight declines there in the price rate of change, the RSI, stochastics, and then the Williams. Very similar to Amazon. Back up here to the price chart. Now, I'm only looking for a small pullback, but this can turn into a correction or worse, but it all depends upon how fast the investors want to exit the room. So, just be prudent. And for today, that's ChewDog Charts. Thank you.